right, I think we're live. Fuck. Okay, why am I not? I should be live. Why is that not? God damn it. Stop sharing. There we go. Shit. Okay. It's just a long. There we go. Okay, Joe. Thanks, man. I'm looking at this going, why the fuck is this not on yet? Sound is good. Yeah, I switched mics. Hopefully this can be better. Boy, there's a long, and I mean long lag. It's like a 60-second lag. You could hear me swear. You could hear me going, why the fuck is this not live? Anytime I have to change anything technically, it's always a little bit of a panic for me, just because I'm looking at my YouTube from the back end of the studio. It doesn't show that it's live. So then I go, oh fuck, what's wrong? So we got something different today. I'm gonna try for you guys. Let's see. Thought Drifter, Joe Ryan. Can't tell. I don't recognize those handles. I don't know if you guys are members or not, or just subs. Well, not just subs, but also subs. So we're going to bring in Brian from Santiment at after about an hour and a half. We'll bring him in because he's got some. I don't know if you've ever looked at this stuff. It's really useful. I have not gotten to the point to where I have any expertise. Oh, you were? Oh, yeah. Hey, Joe. Okay. Glad to see you back. Yeah, crypto kicks. All of a sudden, people get interested again. So anyway, Santiment is a pretty cool product. So we're going to bring him in. He can kind of give us some insights. I'm still very much novice with it, but we'll get rolling here. I usually wait till 5 after and give people a chance to join us. So we'll give them another minute. So that's why this probably, I don't know if it looks different for you guys, but I'm using different software today. It's Restream. But first venture, oh, nice. Hope we laid a good foundation. Hope you've done well. Maybe you're coming back to fine tune a little bit. We do have a totally new course coming out. I think it's coming out this weekend, but things stay on schedule. Which is our it's a brown belt for those in the belt system, but I think it's kind of course that would be available. You wouldn't have to be part of the belt system. So how to combine market structure, smart money concepts, ICT's teaching, with Ralph Nelson Elliott's teaching. They go together quite nicely. So, okay, let's get started. One last throat clear. All right, so let's let these guys know. Okay, there's a few more. Okay. Or let's just see if I can get. Might even have a little time for. We could take requests. All right, so let's see now. I got to figure out. Oh shit! Now let's see. To see your chats, I got to move this over here so I can see you guys. Oh shit! Oh, that doesn't work. Okay, hang on. So, oh fuck. Okay, so this is what you guys are seeing, but then I need the chat. Hang on. How do I get the chat? Oh shit. Let's see. So if I do that, then I got to go over here. That's what you're seeing. So if I do this, yeah, okay, that works. Okay, so we're good. All right, so let's see. So first up, I had ETH. So let's get to the other side. Oh fuck, hang on. ETH. Now let's see what the lag looks like. Share this tab instead. Oh, okay. All right, so I see what I've got to do. I got to change the tab. Okay, I got it. All right, I can work with that. Okay, so let me get. All right, guys. Sorry. These practice live streams are so useful. Okay, hang on. All right, so first up, this was by request here, assuming all's good here. Let's, what have I got here? This is a regression channel. So this is Crypto's Ray. He was first to post up that he was looking for an update on ETH. ETH is a little tricky. This is the section here that's, a bit of a wag, right? We're all kind of guessing there. You can count it a couple of different ways. I think this is the more conservative, which makes it, yeah, Dr. Alban. So I'm just getting a note here. FOMC might change the counts. Yeah, it might change a few today, but I'd be very shocked if they do anything to disrupt the market. Markets just I think, I'm assuming you guys all know this. Certainly the equity markets always forever want to go up, right? They do not need a reason to go up. They need a reason not to go up. So unless they get a surprise today, one way or another, we're going to go up because that's where we are in the markets, right? All news is bullish news. I'd be willing to bet you. Doesn't matter what they say. It'll get spun to be positive. So this count here for Ethereum is a little tricky. 1 2 1 2, right? You're kind of stuck with that. This is such a clear 5. This is a good 5. It's kind of bumpy on the retracements. Now, so as we embark on the impulsive move here, that's where it gets a little tricky. Let's go to a 4 here so we can, on the assumption that we're solid here. So what I have here, this is the anchored VWAP, which I like to use. I keep an eye on it here. So we're right in line here with a couple of imbalances here, fair value gaps. I've got a little order block. Oh, let's see. I've got this is Sonar Labs SMC, right? We recommend them. I think we even have a discount. I think we even get you a discount in their stuff if you use our link, which is in our link tree. Okay, so 1 2. Now, so remember, I got a second 1 2 here, right? So it's the number of 1 2s that make this more bullish, right? So the more 1 2s you get, the more bullish it is. 1 2 1 2. I think that's pretty solid. But now, okay, what are we doing here? 1 2 yet again. You could do this a couple of different ways. So you could look at this as we could go 1 2 here, which I think probably what we're looking at. You could do it a little bit differently as well. You could do it here. If you want to be ultra conservative, you could do the 2 over here with some wacky buck, A, B, C, something along those lines here, and put the 2 here. But until I'm forced to do that, I would choose not to. Let's get you out of there. It seems well. So what can we agree on here? Oh Jesus, where'd we go here? We can agree on. If I can get a box here, that I have consolidation here. From the consolidation comes the expansion, right? That's 100% of, and you can't say this about much in the markets, but this is a never fail proposition. From consolidation comes expansion, always. Never failed, right? That's why I would tell you the squeeze indicator, one of the top 3 indicators of all time. It's remarkable. It's so simple, right? But it's just universal law in the markets. Contraction leads to expansion always, right? It may take a while, but if you get the contraction, you're going to get expansion. So what are we doing in here, right? Okay, is it 1 2? Oh, I think I've got both counts in there. So let's take that off here and let's go with. Now remember, that's 1 2 1. It's 1 2 1 2 1 2 1 2, right? It makes you choke a little bit on the number of 1 2s. But I've got a very clean impulse here and great geometry holding this. Oh shit, let's get to a 1 hour here. And it would seem that I've got a sharp correction here may be done. Given this reaction. Now, this will be absolutely, it's just fucking textbook, right? If this holds, it couldn't be any better. Well, so you can see it, right? So this is I call them a 1062, which is police code for break and enter, right? So here's the break. Now we're coming back here to the imbalances, right? So the premise is that this is where we're going to pick up some unfilled orders, right? And then we should be off the races. That's the premise of a 1062. We come down, we break, right? Suggesting that there's a potential market structure shift, right? If we'll bring in some SMC, right? You can't not bring it in, right? It's just virtually dominates all of TA. Okay, so here's the break. And so we can put this in context, right? This is why I would propose to you, again, I just spent 6 months building a course on it. SMC, fuck, whatever you want to call it, right? Market, it's really market structure. Market structure in combination with Elliott Wave, infinitely more powerful than if you try to trade them either by themselves. So here we come down here now, right? The premise is we should pick up orders here. Oh, okay, pretty good reaction. Oh, it looks like it's too deep for golden, but it doesn't have to be, right? That's all wick anyway. Looks like you might have gotten 786 here. Oh, let's put the whole thing on. All right, so it looks like, we're 707, 786, somewhere in that range, right? So certainly valid for a 1-2 if we're thinking, right, that the 4 is in here. It certainly could be. Let's take that up a degree so it stands out a little bit more. Okay, so I got an ABC, right? So very sharp correction. So we're looking at this. Okay, well, it's, back to Ralph Nelson. Okay, can I work a 5 here? Feel it's a little bumpy, but it's certainly not corrective. You might even have to do it here, A, B, C. But I think you probably need that 1, 2, 3, 4, 5. You probably need that little kicker for the 4, 5. A, B, C. It's skinny. I know it's not great. It's not your ideal correction for the B. But then we just waterfall down in a clear impulse, right? So you're working backwards here. 5, 4, 3, 2, 1, and you're working way back. So I've got a completed impulse here. Hang on. I got guys commenting. Okay, so I've got this. Here we come down. Now, if you're taking this trade, you should already be in, right? Now, I know we haven't, here we are doing this, right? But that is the pattern you're looking for at every pivot, virtually every pivot, right? And every good pivot, you're going to see this. I mean, this is not me saying, "Oh, look what I've discovered." This really comes from FX. Hang on, damn it. The M's and W's, right, that you see so pervasive in FX. But that's the theory here. We've broken here. So this is the sweet. That's more than liquidity. So you have to call that a market structure shift. Right now, is it break a structure? Is it a change of character? Well, here's the little micro market structure shift, right? We sweep that. So really all that's doing is confirming the low. Right. So when this is in 6 months, so this stuff is all fresh in my head. We can't confirm this low until we retrace and take out the last swing high. Right. Otherwise, it could just keep going and keep going. Right. There has to be a level at which we have hang on a second. At which we get a retrace. Oh, what did I just do there? Did I get it back? I wanted to go back. There we go. ETH, right? I bumped over to bump my keyboard. All right, so this some people will call that the inducement, right? We've taken to calling it the inducement because this is all one swing down here. This is one leg, right? So when we come back here, we got to sweep that. Now that confirms the low. Now as we retrace, okay, that's a very, very, very valid location to enter, right? So I say that with really the emphasis being on, on money management. Jesus, once these things move, I have a hard time finding them. Okay, so if you're long here, let's say you're not going to get the pivot here. That's the thinking, right? So minimum, there's 6 to 1. We're just going back to the last order block. How do I know that's a good order block? Because it has a fair value gap comes off of it, right? There's another one here, right? But if you wanted to be more conservative, you might take a partial here because I've got a good order block here, right? You guys see that, right? So the key to a good order block is, does it have a fair value gap that comes right after it? So yes, here. Yes, here. So for first target, that, still 2.8 to 1, nothing to sneeze at, right? If we're going to go up here and swing the high, well, then the next target would be supply up here. So oh, shut up. Someone at my door. Okay. So that's that. It's not too late to get in, right? I mean, if your stop's down here, depending on your risk tolerance, I mean, are you ideally suited? No. Jesus, my dogs are going nuts. All right, let's move on from that. Of course, if you want to be more conservative with this, let's confirm, right? Because do you want to trade today with the Fed? Certainly you could. That's not unreasonable to say, I'll wait. Okay, one of two things is going to happen. We're going to free fall here, take out the low, and okay, well, we're going to have to rethink this count, or we're going to launch. So if we launch, I mean, either way. Right. If it drops because the Fed, just the volatility, and it could just be that they sweep the low and could just trading on a day like today is not a great day to trade because you're so vulnerable to manipulation because any kind of move is likely to be manipulative. So I can certainly understand what's just happened there. I can certainly understand waiting to see, okay, well, I mean, if you were going to trade today, I'd keep the size small just because you have that risk factor in there. They could easily just do this easily, right? That's in fact, whales, biffs, algos, and people behind the algos love days like this because there's so much nervous energy that they can take advantage of. All right, so I would be cautiously optimistic that we have a good low here. You'll note here we're coming out of an order block here that also has a fair value gap right after it. But this is so sharp, right? The one negative is that we have sharp followed by sharp. Sharp. It's a guideline, not a hard rule. It's not like we can't have two sharps, right? Which that kind of brought you back to maybe something more like this, right? Which say, okay, this is going to take out one more 1-2 out of it. If this is, oh, fuck. A, B, how would we do this? You'd have to do A, B, C as a W. Let's see, how can I do that? Oh, fuck. I think we'd have to do WXY into an A, B, and then into a C. So it'd be WXY. Pardon me. It'd be A, B, C. Shit, it's confusing myself. WXY into an A, B, C into a B, 1, 2, it gets a little skinny for the C, which is why I don't have that as the primary count, right? The idea is here. It's a 1, 2. And even that, okay, it's not picture perfect into that 2, but the geometry is so good, right? So when it's confusing here, then okay, what else do I have to work with? How's the geometry? Oh, how about the location for the 4th? Oh, pretty good. I think the other thing I had on here, I don't know what happened to it. I would use the same anchor. All right, so here's an anchored VWAP. So if I'm going to come down lower, okay, something. If we're coming down here to the anchored VWAP, okay, we're taking out the 1, so this count starts to fall apart. So really, if you look at it that way, right, this is the point where you can say, okay, if I want to be long here, well, this is where this count gets completely destroyed. So even if you're longing here, I mean, that's enough distance here. You might wait, but that's where we invalidate this count. You would, let's see, if you're putting the 2 over here, if you're not using this as the 1, 2, your 1, 2 is here. 3, 4, it gets very, very skinny here. Right. Likely what you'd end up with here is if we get a deeper retracement here, we'd be relabeling here that this went 1, 2, and then we might again do another 1, 2, right? Ultimately being very bullish. We'll see, right? So this level here, this 2,700, absolutely critical that we hold that through any volatility post-Fed. Okay, so that's ETH. I think I don't know if there's much else to comment there. We looked at it here. It either is or it isn't, right? You got all the ingredients for the pivot. Now let's see if it holds. Okay, that's Cryptos Ray. I'm going to watch the clock today, 11:51. So since we have Brian joining us at 1. Okay. XLE, I just had this up. Now I got to find it. This is it, XLE. Okay, so this is Ben B. Well, this is a real bitch here. It looks like this is, you know, this is one. Excuse me. This is one where you go, okay, well, clearly I got a 3 here, so I can't finish here. And then what am I doing with that, right? So that's one of those, oh, what the triangle, right? So when you're that, like, what the hell could triangle? 1, 2, right? Is the what you deduce from that? No. Right? We're going to have to rally here. It's not bad, right? Actually, it's not a bad count by any means in terms of the potential here. I mean, you can look at this a couple of different ways, right? You could say consolidation. Oh, let's see. Do I have it? Yeah. Right. So this is another way to get a squeeze, right? Whenever it's black here, we have a squeeze, right? So black is a squeeze. I wish it would highlight the bars, right? You can see, well, this is actually not bad, right? So you see the fading momentum, right? Fading momentum, right? As we're going up, momentum is fading, right? All the way down. Now, if we're going to go right now, this of course can get rocked, right? With a big move here, but would you be selling there? I mean, the only thought in selling would be that you're at the swing high. Excuse me, guys. So that would be the only thinking that, oh, wait a second. You're telling me to buy that breakout? No, I'm not telling you to buy that breakout. I'm telling you, right, I would never, ever, 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 ever suggest someone buy a breakout, right? It's not something I do. The only exception would be an equity like this. So it's the only place where breakouts have a decent track record is trading breakouts is in equities. But I would never trade that. Personally, my view is, okay, fine. You're going to go, great, right? Likely there's going to be a retrace and I can participate there, but I don't ever do that because you're just so vulnerable, right? All it takes is just, yeah, and then who piles in here? Retail. Right. It's just too easy, right? And then it takes you get a sphincter clench the whole time. Like, oh shit. Oh, right. I don't like that kind of drama in my trading. So I avoid it. Oh, God damn it. I did it again. I keep hitting it. It's because I've got the new microphone. That's why it's on my it's right in front of my keyboard. So I have to work around it because it's giant. That's why I switched the other one. Okay. 1, 2, 3, 4, 1, 2. Well, if you're not in now, I wouldn't buy that. Well, let's back up a little bit. Ben B, do we have a higher high? Looks like we do. Let's get to a 3-day here. Oh, and pretty nice ABC. It looks like it's technical as well. Yep. What do we got here? You're just late, right? There's just too much risk up there. Let's see. Look, we got you got order blocks galore up here. So here's let me get on this on here. What have we got here? Oh, it's not going to show them to me because they're too far. They're too old. Oh, you can see a couple of them, right? So you might just look at it this way and say unmitigated order flow, right? And then we got imbalances, right? This is this little upswing here, right? This little unmitigated section here. Well, you got a partial. I shouldn't say that. You got a partial there. Yeah, it's just too much risk, right, to go in that. And then you got the swing high, right? So we know everybody knows there's stops over that, right? So is that liquidity? Well, who's that liquidity for? The thing you have to remember, right? It's just logical. It's people like, oh, but how do I know? It shouldn't be mysterious. If they want to run higher, right? So that's okay. Who moves the market, right? That's the BIFs, right? Banks, institutions, and funds move the market, right? We just try and tag along for the ride. If they want to keep, if their intention is to drive this higher, okay, well, there has to be someone to sell to, right? Otherwise, no sellers, right? They need sellers, right? That's the whole premise it's not a premise. That's the reality of why they're constantly seeking liquidity. Oh shit. Let's see. Did I, oh, whoops here. Sorry guys. Sorry. Holy shit. Well, that's new for me. I have to change the shit. Sorry guys. I just looked over at the chat. See, normally when I do OBS, if I just change, it doesn't, son of a bitch. Sorry about that, guys. It doesn't require me to change the tab, but since I'm doing restream today, because Brian's adding, it's a change in the format. I apologize, guys. I probably went 5 minutes there. I sincerely apologize. Okay, I won't miss that again. Okay, 1, 2, 3. Looks like triangle 4, 1, 2. Shit, I apologize. Shit, I probably lost half of you. Okay, 1, 2, 3. 4, must got to be a 4, 1, 2. Right. The premise is we're going higher. So this was the point I was trying to make. If we're going up higher here, okay, well, there's got to be someone to sell to. Right. It's not like, oh, people, the much higher prices will be taking profit up here. There has to be someone to if I wanted to take higher, right, I'm going to buy it. I got to buy it from someone. Right. Well, of course, market makers play a role there. But the reason that they will need to come back is to grab some liquidity because they need sellers. They need that liquidity to keep going. Right. So that's why you often, that's why the whole premise, the foundational piece of market structure is that from the break of structure, we anticipate the retrace. It's a requirement, right? They've got to come back down and grab some liquidity so it can keep going. And then you can look at that and say, well, that seems like, how does that work with Elliott Wave? Well, what's happening here? What's happening here? This is liquidity being built up, right? Grab liquidity, right? So, oh, it's going higher. Oh, no, it's going lower. Oh, it's going higher. No, it's going lower. Liquidity, right? And then from this consolidation comes the expansion, right? Now you can look at that and say, well, shit, I don't know how do you know which way the expansion's coming? Well, you don't know, but we can certainly use the context here. Are we in an uptrend? Well, we've been in an uptrend. Now all of a sudden we're not trending, we're going sideways. We're consolidating. So you might look at it this way. Consolidation, expansion, consolidation, expansion. It's I know it's always easier, right? When you're looking at a chart and you're not having to make a trading decision, right? But you have to have that foundation to say, okay, do I want to trade here? Do I want to trade? Do I want to anticipate the expansion? Well, the Elliott count would suggest that would be the right direction, but do you want to buy the high? I mean, some have. I mean, if I hadn't done it, right? It's not like I'm saying, well, boy, I watched it. I've lived it. I just don't do it, right? So when you're in a range, what do you want to do in a range? God damn it, these fucking allergies. Sorry, another throat clearing. God, it's just the absolute bane of my existence. Okay, so if I'm up here, do I want to buy? No, I want to sell. How about the last time I was up here? Do I want to buy? No. How about the last time I was up here? Right. So until we get out of it, I mean, what you're doing here is you're going, come on, 7. I mean, you're just rolling dice. Oh, I think, okay, well, the trend is up, so it should go. But don't you recognize how vulnerable you are there? You know, I mean, if gun to my head, I had to trade this, I'd buy call spread. So at least I wasn't just balls deep, you know, long, right? At least I had some sort of a hedge on it and I could fuck with it if I needed to, right? If I needed to dump the call and turn it into a put spread or something, I'd have some flexibility here. If you just buy it, you know, like I said, come on, 7. That's all you're doing, right? You have no edge there. That's the reality, right? And that's probably the biggest thing the mistake that it's so easy to make. Well, fuck, let's just see what happens. As opposed to, okay, if I'm journaling my trades, which we all should be doing, if I'm journaling my trades and I look back at it and I go, okay, how did I do on the XLE trade? Okay, why was I in the trade? Why did I take the long there? Well, I was anticipating the breakout. Okay, well, so that's got to be part of your play, of your playlist, if you will, of, oh yeah, I take breakouts. Why did I take the breakout? Well, because I saw the consolidation as I'm anticipating the trend to continue. And so from that consolidation, I was expecting the expansion. Okay, that's all valid. That's all perfectly valid. Okay, where's your stop? Well, I just use a percentage of my account. Okay, that's trading your wallet, not the market. Where would you want your stop to be? Well, I mean, if that's not good enough for you, I mean, so here, let's just do it, right? So I'm going to take the breakout, right? I'm going to need something that's going to be my stop right there. So I'm going to need a pretty good, am I log? No, I'm not. There's to get 2 to 1. Okay, so this is going to have to go. Well, we can map it out, right? I'm going to need a 1. I'm going to need a 2. I'm going to need a 3. I'm going to need a 4. I'm going to need a 5. All right. What would that look like? Okay, right. So that even might be a bit much here, right? To go to 2618. What else could we use? Right. Again, it's not just like, oh, 1, 2. It could be a 3. Well, of course, we can also look at the length of the 1 from the proposed 4. Right here would be, oh, that all we're going to get? No, that doesn't make sense, right? Because we've had this long consolidation. So we're going to go higher than that. Here's 2618, the length of the 1. That's a monster move. If we get 2618, the length of the 1, big one. Right, here's the most common is 100, right? But that doesn't make sense if we're going to get an extension here in the 5th. So maybe we're going to get a 200. That would do it. If this is going to be a 5, right? So this is how I view it, right? And again, I'm not saying my way is the right way. I'm just giving you another trader's perspective on it. If we're going to get this, so if the count is accurate, if it's 1, 2, this is not optional. If we're going to finish here, well, I suppose we could have a diag, but we're looking for an impulse here. We're looking for it. Okay, well, if we're looking for an impulse, well, the insinuation is that there's going to be 5 legs of it. So do I want to buy this and then sit through the retrace here? Okay, maybe it's not deep. Maybe that's something you'd consider. Where do they typically go? Right here. Okay, so if your stop is here and you're going to enter on between the 50 and the golden zone, okay, and you're after that second target, okay, that's not bad. So what do you got there? That's 3 to 1. It's not terrible. But see, the key point is here, if I'm expecting to get a 5, I'm going to take the 2 into the 3 right there. They're boom, 1, 2, 3, 4, 5. That's this being the 618 or the third off of that, right? The implication here, the way I've drawn it, is you're going to get further. 1, 2. Now, what's the risk here? That you get some sort of big extension in the 1? That we're going to do this. Oh shit! Oh fuck! I missed it. Oh fuck! FOMO, right? FOMO gets the better of you. So what do? You long it up here. What happens? And the 2 comes down. It's just risk tolerance. Do I have an edge here, right? That's always what I'm asking myself, right? When I'm looking at a trade here, what's my edge? What is my edge here? I mean, that's kind of an open-ended question. What is the edge there? I'd propose to you don't have one. So why take the trade? If you can't articulate why you have an edge in the market there on that trade, why are you taking the trade? Just fuel for thought. Okay, Moro. Oh, he must be trading this. Okay, so I guess I'm gonna try and let's see here. What else do I have here? Okay, Moro. I got to give you a new one. AA. So I'm gonna go to fuck. How am I gonna do this? I guess I'm gonna do it here, so that won't screw us up here. So I'm gonna go AA here. AA. Okay. Poor people are unable to buy gold. Oh Jesus. Siam, you don't need to shout at us. That's an unnecessary comment. If I could boot you off of this live stream, I would. That's unnecessary. Okay, so don't shout at the people on this live stream. Okay, or you will be uninvited. Okay, so what do I got here? So I got Alcoa. This is Moro asking about Alcoa. Well, that's a 3-day. God, let's get a weekly on that. Sometimes, right, you got to get some perspective. We got to go out. Huh, interesting. Well, just looking at that, do you see a clear? Well, let's see what our range is here. Yeah, that's enough to go to log scale. All right, so we got to look at that in log. I mean, we're going from $4 to $100. Yeah, we got to be in log. Oh, Jesus, that's annoying. A little consolidation here. We pivot at the 50. Well, but just at first glance, I don't know why anyone would choose something other than this, right? Just at first glance. Okay, so I've got this is sort of clearly not corrective. Okay, so I've got an impulse here. Oh, fuck. 1, 2. It looks like you probably keep it simple. Jesus, that's annoying. All right, come here. All right, what? If I can get it started. So, yeah, can I get it done there? It looks like I have to do it here to get that impulse to finish. It's a bit of a wag, but okay. It's not correction. Okay, so ABC, we come down to the 50, right, where we have an imbalance, right, and we have there'd be a demand zone right here, right. So we remember any order block that you're considering, make sure there's a fair value gap there, right, or it's not a good order block. It's just a smart money trap. Okay, so we have the order block's actually right in the middle. The coloring is a little clouded, right? So right there. Okay, so we've got this, and now remember when we started here, the pattern that you're looking for, we don't quite have it. Almost. What we want to see, right, almost at any pivot like this, we want to see something like this and now come back, right? So there's your M, right, or a W, or it's the same thing on the coming the other direction, right? We want to see this right now, right? So that's what you're looking for. So there's your M and your W, right? That's what that comes from, right? So here's the break and come back. All right. So that's the thinking behind it, right? That's not necessarily SMC, although SMC is kind of taking it. As is so much the case with, not to get into a thing about ICT, but a lot of relabeling, right? What he's best at is marketing. Okay. So A, B, C. Okay, well, do I have a 1, 2 here? It's not particularly pretty. It looks more like that's a 3. So does this need to roll over one more time? So then you might look at that and say, okay, well, let me take off my SMC hat and let's put on my Elliott hat. Do I have a finish here, right? We always finish, always finish in a 5, right? That's not optional. Okay, is this the 4? And we're going to go 1, 2, right? That's possible. Right? It's not the greatest looking one, but a 1, 2. Oh shit, I'm on a weekly. 1, 2. Well, you wanted to put the 3 here, right? You want to put the 3 here and the 4 here, right? Some sort of triangle. A, B, C, D, E, right? There's your triangle. Oh shit, we'll just highlight it, right? So there's a triangle 4. Yeah. Am I done? I really don't want to do this, right? It feels like I've overextended here to accommodate what I want to see. Well, I don't think there's any way around. Let's see. Hey, that's actually kind of, I can't say I like that. I might have to do this actually. Because I'm assuming you guys are seeing that here. Oh shit! Wait, am I on the right one? Oh shit! Yeah, we are. Okay, jeez, I forgot. I got to remember to do that. You might have to do this, right, to get that V there, because 1, 2, 3, 4, 5. It's hard. Here's what doesn't seem like you can do this. It doesn't look like you can go 1, 2, 3. Doesn't look like that works, and it doesn't look like you can go 1, 2, 3, 4, 5 into the 1, 2, because then this would be 3. Oh shit! I should double check before Oh, let's just see here for longer and log. Oh, we are. Let's see. So we should be good. Nope, not. Didn't make it, right? So you can't use log and go, oh, it's just longer in log, right? See, the longer, it either is or it isn't longer, right? So you can't go 1, 2, 3, 4, 5, right? Okay, so let's see. Let's see. So if I go 1, 2, 1, 2, shit's 3 will be, if I'm not mistaken. No, I guess I can do that. Son of a bitch. No, I don't know that it matters. Let's come out of here. 1, 2. I want to put it there. Now, what do I have here? Right. So this has to kick now for that to be finished. One, 2, 3, 4, 5. A, B, C. 1, 2, 3, 4, 5. 1, 2. Can't be an impulse. Let's see if we're technical. It looks like it's too deep. It is. It looks like the other side got it. They did. Okay, so there's the, right, there's Al. Al's always there, right? One side or the other, right? So these guys get it. And what do we do on the retrace, right? But it looks like we're already past. Oh, Jesus, that's just, I think that's hurry up and wait. See, these are secondary. What you really want to see there is for it to, I mean, let me rephrase that. What I would want to see is have it take out that and then come back down. These are little micro swings here. It's not significant enough here. I mean, the very aggressive might look at it and say, okay, there's the break and we've come back down here, but it's not really a, I mean, you're dealing with, right, it's always the case with equities, right? You've got a gap there. I'd let that sit. It's just not, again, kind of my premise always. If it's not clear, wait. If you're not absolutely sure what you're looking at, why take the trade? There's too much to trade. Why take one with, fuck, I don't know. I don't know what we got there. It's not an impulse. I've got a 3 coming down here. Now, if I start to get an impulse here, okay, maybe I can put something together. But as it sits right now, it's a wag, right? Why guess? If you took this trade, fuck, long or short, I don't know what your bias is, right? But my guess would be you'd be looking for a long. What is your edge there? Oh, well, I bounced on the 50. Okay, well, I bounced on the 50. What do I have coming off of that? Can I be clear about what I have here? Whether it's market structure or Elliott Wave, you're wagging. Why guess? What's your edge? You don't have one, so why take the trade? Right? Well, I mean, pardon me, I shouldn't say it that way. I don't see any edge there, so I wouldn't take that trade until so. Now, if this clears up, maybe it comes, right? Oh, okay. Well, now I got an impulse. Okay, well, now I got something I can hang my hat on. Okay, what the fuck? I don't know what I got there. 1, A, B, C, or fuck, can I even pull that off? I don't think you can, right? So it could be too many things, right? So my view is, when in doubt, hold, wait. Because why would you take it now, right? If you want to long, what's the only reason you would take that? FOMO. So that's the only reason. There's no edge here. Oh, I thought it was going to go. I didn't want to miss it. Not a good way to survive long term. Okay, Riot is the other one he wanted. Riot Platforms. How are we doing? It's 12:15. We're okay. Now I got all this SMC stuff on here, which can be useful. What I tend to do is I start with the Elliott, right? Because Elliott Wave is structure mapping, right? So the SMC guys all want to do their structure mapping. Well, the Elliott Wave is the OG of structure mapping, right? That was from the 1930s. He's structure mapping. Okay, do I have an impulse here? Looks like I might. I don't know. Do markets move in 5s and 3s? You tell me. Oh, that was in the 1930s. They don't do that anymore, do they? It's like we had a 3-4 coming down. Or all right, let's come back out here. So where are we? Where are we? Okay, well, I think we looked at this before. Well, I would love to know the number of times I've shown that on videos and live streams. Got to be 50,000. Got to be. Got to easily 50,000 times. Amazingly, some people go, "Oh, all right, that's good for you. It doesn't work for me." Okay, so that's fine. What would be the next thing you'd be looking for? See, I look and I go, well, why would you not be looking for that? No, fuck. I don't know. We could have a triangle in here. A, B, C, D, E. Let's see what we get on that B, right? Because that's whenever you look at something and you go, what the fuck? Triangle. I don't know yet. But that's the key phrase right there. I don't know yet. I don't know what I'm going to get there. So why take the trade? The only reason to take it here is because you've got a good measured move here with a target way up here, right? That's the right. So where's your target? Right, there's your first target. Third target's up here. Could Riot get there? Well, okay. Think about that for a second. How would we get there? That's a target of 1,200. Well, first off, right, whenever you have a golden zone, you have a golden corner pocket. Which means, get that, as long as this pivot holds. Now, this is heavy emphasis. As long as this pivot holds, I have 80% probability of getting there. That's a big caveat, as long as the pivot holds. But if we are going higher, there's your odds, right? It's the single best odds in trading, right there, right there, right there. Now, 80% is not 100%. So, right, that certainly can happen. If we break this pivot, right, it's different scenario. But as it sits right now, that's 80% odds that we get there. So if we're going to get there, what's that likely to look like? Oh, 1, 2, 3, 4, 5. Shit, I've seen it take 5 years to get there. Maybe we're not going to get it till somewhere 25, 26. Here's what it's not likely to do. Go in a straight line. I mean, fuck here, 1, 2, you might get a monster 3 there. But likely, right, you're going to have some retrace and profit taking along the way. As it sits right now, let's label it. It's not the greatest looking one, but given where we're sitting, why would you not be thinking that? You know, when I say that, I'm not trying to be a smartass. I'm genuinely just saying, what do you see there that would make you think, oh no, we're going much lower? Let's reset that. Now, if we start to get too far outside of this, right, there's a, you can kind of look at it. And, you can put, let's put a 1.5 on that. Okay, so I got, I'm just adding another 50% on this. You don't want these to go, we don't want this going up, over too far from the median line. Then I would just redraw another one, right? Then you'd get another one over here, right? Then I would do something like this for another one. But as long as we stay in that 1.5, you don't want to see that, right? So if we start coming down like this, okay, well then the whole premise, the thing starts to fall apart. But as it sits right now, it looks like we might come down to the 150 here. If indeed we're gonna triangle here, I don't know that we are, but if we're gonna get some sort of a triangle here into the C, okay, well now we're pushing over away from the initial angles. Something to keep in mind. Here's what many people will do, right? If this gets over here and we're doing another one, right? They forget the first one. Oh, don't forget about that one. Oh yeah, I got the median line. Well, don't forget the bigger median line was way the hell up here. Something to keep in mind. So that's hurry up and wait. Although I sure like that. As a matter of fact, I can do it. I would buy some of that myself. I get some of my best trades from these live streams from stuff that guys suggest because I don't have time to look at everything. Okay, I spent too much time there. Okay, so Sienna Plays. I got a link for you here. Wait a second. I got to share the tab. Okay, I'm getting the hang of it now. All right. Hello, Wonka. Thank you so much. Oh, I'm sorry, man. Sorry, I screwed you guys up there. Okay, let's get a link. So this is one I probably should acknowledge. I have a pretty substantial position here, so I don't want people to think that I'm pumping my own book. So I tell you, I own some of this. Well, okay, given what we just talked about, could you understand why I own some of this? From the consolidation comes the expansion. Why? Oh shit! Maybe we'll come out in a perfect impulse. Shouldn't be surprising that I own some of this. I mean, I went pretty heavy here, right? So, oh shit! Let's get to this. That's what I want. So I feel pretty good about this. Well, okay. So if you're not in this, so let's say you're like, oh, yeah, great. Oh, how does that help me? Well, okay, slow down. What do we got? Consolidation, right? Does the Elliott count even matter here? Not really. What are we doing? We're going sideways. And it's so fucking textbook. It's just amazing, right? So what's the last thing that happens, right? We sweep all the liquid. Okay, think of it this way, right? When the market is accumulating, remember as we talked before, right? When the market is accumulating, what is it they're doing here? Here, let's do it this way. Okay, right. So all of the pivots down here under the discount, right? So if we cut it in half, right, premium discount, right? Look at every pivot down here gets run. What are they doing down here? This is accumulation, right? They are accumulating because they need sells if they want to take it higher, right? I got to be sure that everybody's clear on that. The reason they're doing that, they don't care, right? They'll go short, long, short. It doesn't matter. What they're doing is accumulating all the sell stops down here. Or the breakout bozos who think, oh, it's falling through the floor, right? They get ass raped, right? Do you see how it's all under? And look how much of it is under the 50 of the 50, right? So if you quartered this, look at all the accumulation down here. Accumulate, and then oh, and then here you got. We're not quite out of it yet, but this is your first like, oh shit, that looks like an impulse. Well, it was a long two. Right, I'm sure that scared people out, right? That's the point. We'll get. That's a very deep retracement for that too. Now, this is a good example here because if you thought, okay, 1, 2, and you say, okay, well, coming out of that, well, if that's my 2, if right, I'm going to need a big 3, 4, 5. Well, so I'm going to wait for the 50% retracement on the 2. Still waiting. Right, that's the risk, right? That's the trade-off of being patient, waiting for your pitch, if you will. If I had not been accumulating here, if you're waiting for that 50 or golden zone, you're still waiting. So you got to be aware of that. So if this 1, 2, oh boy, you didn't have much of a chance to get in. Market's not designed to be fair. It's not there to say, oh shit, let me in. No, right? There's nothing about fairness here. Manipulation, absolutely, right? It's every day, right? It's all that happens is manipulation, right? Just that's you can't fight it, right? You got to embrace it. It's like AI. You can't go, oh, this AI is just fucking crazy, man. I don't fuck that stuff. It's just over my head, right? You'll be left so far in the dirt. I mean, you have to embrace it. You can't fight it. Same thing with a trade like this. So if you're into something like this, and your rule is, I wait, I don't buy them until I get a feel. Well, fuck, you missed. Sorry about it. Welcome to trading, right? You're gonna miss trades. 1, 2, 3, 4, 5, right? That's the only, from this low, that's the deepest retracement you got until you got to your 4. And then it's always harder in here because you're like, oh shit, man. Okay, where's the low? Okay, let's just come back to just basics of how the markets move. Consolidate, right? All this is very Wyckofian, right? So this is cause, effect. Think of it that way. accumulate long. It's over a year of accumulation, right? And it's really, you can't say it's over until here. It's over a year of accumulation, right? I remember looking at that, God damn, that's a serious accumulation. Because we're going back to May of 22. We're almost to May of 24. Accumulate, right? And then, so what do? From the accumulation comes the expansion. Then what's next? More accumulation. Or consolidation. Think of it this way: consolidate, expand, consolidate, expand. It's what you want to look for, right? Is it obvious here? Well, we're getting into some other shit over there. This is where it's just so drop dead. Oh my God. Oh, are they going to give me the spring, right? For you Wyckofians? Oh, maybe they'll give me the spring. Right? Which is all that is just one last grab of all the liquidity and then bending over the breakout traders, right? Who said, oh God, it's falling to zero from $4. So it's going to zero. Okay, here. So, all right. So that's a lot of talk. How does that help me now? Well, okay. Right. Again, let's think about trading with some discipline. If the discipline is that I wait for that 5 to complete because I missed it here, I didn't get it, I missed it. What are you thinking right now? Oh God, I hope I get a chance to buy the retrace, because if we're going to keep going, right? I mean, anything's possible in the market, but is that what you're anticipating? That we're just going to go straight after this impulse? We're just going to go straight. Oh, we got a little retrace, so now it's going to be just straight. Well, of course, anything's possible. What do they typically do? What's more common? That if I have a completed impulse, I'd be looking down here. I mean, wouldn't that be your first thought? Oh, well, maybe I can get it at down here. Now, where did we launch from? Really, you could say the consolidation didn't end till right here. I know. If I'm coming back here to the 50, where did I launch from? So did you miss it? Well, you missed some of it, right? But so think of it this way. If it does this, I'm not taking profit. And I've got a very big position here. Because I'm trading not for this. I don't care about this. I'm trading for this. 1, 2, 3, right? And that I'm not even done here yet. 4, 5. Right. So I'm not worried about it right now. If we break this low, I'd probably change my mind. But as it sits right now, I'm okay, bring it down. I'm just buying more here. If I get the opportunity to buy it here, oh, fuck yes. Really? That's why it's fresh on my charts here, because I'm just looking at this going, how's that trade doing? Oh man, are we going to get a second chance here? Okay, so we're anticipating 3. Oh, we got to start on it? Looks like it. I'd want to see it break that channel. Can I get that? Market's under no obligation to do this. It's just what it tends to do. So what do you want to trade? This is what it normally does. What do you want to trade? Abnormal? No, I'm looking for do something it never does. That's kind of what you're saying. Or do you want to try and trade based on what it does the majority of the time? What does it normally do? It's kind of silly to say it that way, but you didn't miss anything. You just, now it's the patience, right? Oh, it could be, here's what retail does. Oh, fuck. Okay, I can't wait. So they buy it here. Are they thinking about getting a 3-wave correction? No. What are they thinking about? They're thinking about all the money they're going to make when it does that. Now, okay, right? So if it does this here, and maybe they buy more here and they average down, just what I'm talking about doing. Excuse me. But if you're trading with what more typically, here's a more typical retail play. Oh, it's down to the prior support. Let's buy it with leverage. Oh, let's load up, right? You've been reading, I'm sure you read the same stuff I do, right? About within the majors, right? People just buying on leverage, they just get liquidated, right? So they buy here, right? With leverage, rolls over for the C, and then they get levered out, liquidated out. And then, and then you can almost count on it. what happens next, right? What they were anticipating, but they're a little uncomfortable. Oh, I took that loss down there. Shit, I'm going to wait. And so they missed the ride that whole time because they wanted to be aggressive here and they weren't willing to be patient. So it comes down here, people who are patient going, okay, well, my rule is here. I buy them at the 50. I want to see a 3-wave correction. They buy that comfortably, and we'll see if we get that, but that's my plan. Bigger point is don't FOMO, because the market will not always, but the majority of the time come back to give you an opportunity to get in. Okay, so there's link. Sienna plays also. How am I doing on time? 12:30. We got half an hour. Tesla. Oh shit. I had it. Hang on. I know you guys can't see it. Let me find it. I had it. Here it is. Okay. Share this instead. Okay. This is a beast. This is really an ugly chart, actually. All right, so you got to get out to a little more time here. It's hard not to call this anything but a complex correction, right? I mean, it is complex. A, B, C, D, E, right? So this is the last time we looked at this. So what's making this difficult is we're not getting threes. Let me rephrase that. We're getting 3-wave patterns, but we're not getting the impulsive third. So, okay, A, B, oh, okay, maybe I got an impulsive C. A, B, C, D, E, maybe. Right now, it's a lot to call. It's, you know, we're that's a wag. It would make sense where it's happening. It would make sense. I sure don't want to see this low taken out. What's the alternative, right? So if we're going to go leading diag here into a B in impulse so I got an A, I got a clear 3 into a B. Oh, getting a little wacky over here. Am I going to do some sort of a diag, or is the C just going to come in down here? No, okay, all right. What's the please tell me you're already thinking, oh God, well, we better check this, or wouldn't that be the first thing you checked? How are we doing? Where's Al? Nice big fair value gap here. Fair value gap. So this would be the halfway point of the fair value gap at the golden zone. Does that mean sit there with a limit order? No. Let's get to a daily. Oh, I take some of this off here. We'll bring that in the last second. Okay, so I've got, oh, that must have been me drawing that from the last time. It's just a lot of threes. 3, it's like 5 there. Again, another 3. Because of all the threes, that's what makes you think, oh, that we're doing some sort of a weird triangle. Okay, bottom line is, do we have an edge here? Is there a trade there? Well, that's a daily. What would you want to see here? Well, let's get in there a little bit. So this is a valid pullback. Oh, yeah, it is. Right here. Okay, so we could call that, we'll call that the inducement, right? That's the swing. So before I can confirm that I've got a low here, I needed to take that out. So this needs to come back here, take that, right? So I say, okay, now I can confirm I've got a low here. All right, so here, let's do it. Oh, here. All right, so now I got a low. All right, so because I've taken this out, right? So because otherwise, how do I know I have a low? If not, you don't, right? So because it could just do this and just keep going and just keep going and just keep going. There has to be it has to take out one of it has to take out the last retracement to confirm the low. Otherwise, you're just buying blindly. So it's got to take this out, right? So that's the last swing before it went down. This is all just one leg. So we got to take this out here. All right, so I'm going to straighten that. Now I got to come up here. Ideally, you'd go a little higher, but this would qualify. So I want to see it come up here, and then I want to see it come back down. Right now, perhaps in this swing up, there'd be imbalance, something to key off of rather than just this little consolidation here. Maybe I can go again here. That's what you look for, so that you're not just going, oh, I'm going to buy the turn, right? That's trust me, for years, you'd get some, miss some. It was just inconsistent. So now I wait. I want to see a buying pattern. I think of it as again, I call it a 1062. Here's the break. Here's the enter, right? Or a W or an X, or excuse me, a W or an M. This would be kind of an M. I'd love it. I'd like it better up here. We swept that, got it up a little bit higher, and then you're waiting for it to come back down, because the premise being, this would be your true break of structure up here. This would be just a change of character. This is just the inducement, right? So you'd have a little sequence here, right? So you get, right, you can see the liquidity was all here. That's what you're sitting there. Liquidity. Remember, if they want, think of it this way, right? If they want to take it higher, they need liquidity, right? We can grab some here, come back down, and go. So this would be I'm going to use that. This would be a chalk up, right? Then you'd have a break of structure here. So you'd be on your way here. So this is the first indication. Oh, maybe the market structure, the price delivery, if we want to use true SMC language, the price delivery has changed. Oh, okay. Where's my best? Okay, if I get that, where's my best risk reward? Right there, right? So I can, because here's my risk, here's my reward. That's going to be easily 3 to 1. Earnings are coming April 24th. Probably be choppy until we get to earnings. So you gotta make a choice there. We could easily go 3 here and just give us the D, right, before we come back down for the E. So if you're looking for 3 here, well, you'd have a trade. What do you? A little over a month to earnings, you could probably be building something here. They're not doing great, right? They're lowering prices, margins are down. They've got their challenges, and he's a genius, but a fucking lunatic. Okay, let's go to ASML. Okay, so let me here. This actually, I kind of like this. I get to find it before I bring it over here. Okay, so now, I guess that is right. So we're still on it. Same one. Okay, this is a tricky one. Who wanted this? This is Basque coins. Do we have Fed yet? Do we get it? So I guess not. Market's dumping. Okay. There's a nice little measured move here, because coming off of this, the question mark is it 3? You got a real conundrum here. It would be very easy to look at this and think, oh, well, there's what's the big fucking deal? Not 1 2 1 1 2 1. Nope, can't be that. 1, nope, can't be that. A B, that sure looks like a 5, so it's not a B. So you're a little bit, if not this, then what? And if not that, then this. Well, so this little piece right here would suggest, okay, well, we know Al's here, right? So no surprise, right? Al's everywhere. Okay, so it's to the tick, right? So that's how we know it's Al. Well, so what? Since it keeps going, what would your thought be? It cannot be. We can't put the 1 here, because we can't take out that 2. So I looked at this and said, I got another impulse here. Can I do this? This would have to be 3 4 5 of the 3, but there's not much of a 2 in there. So you got a little bit of a conundrum there, which makes me pause just for a second and say, okay, if this is 1 2, well, I want to see that 2 be technical, because I'm a little iffy in here. I'm on a daily. Maybe there's something I can dig out of there, but I wanted this to be it, right? I want this here 4 5, but it doesn't quite play because that comes off of it. And then we sweep this low. So it can't be 1 2. So you're a little stuck here. Now, I want a technical pivot here. Well, number one, how's it look? Right? We come right into a demand zone. off the low. Are we technical? That looks like 50 to the tick. So yes, the answer is we're technical. What do we got here? Breaker block here, right? So here's the supply. It's broken, comes back. Here we got now. So breaker block again. This is ICT's marketing, right? So what was supply support becomes resistance. Oh, that's not sexy. Let's call it a breaker block. Much sexier, right? Give him kudos for that. Okay, so 1, 2. Whoa. 1, 2, 3, 4. Looks like that's another 1, 2 there. Oh, Jesus Christ. God, that's annoying. 1, 2. All right, is that the only 2 I've got? 3. Again, there's not much of a 2 in that. So are you thinking 3, 4, 5? Often it's, you got to, when you're thinking with your Elliott hat on, you got to place them somewhere and say, okay, does that make sense, right? Would that be legit? 1, 2. Well, what's good about it, right? Let's focus on the positive, right? I've got this very self-contained channel. Well, let's get you out a little bit. Oh shit, actually, if I'm not in log scale, I prefer regression, right? So I just get 2 standard deviations on either side, right? So I got a nice, okay, that could be it. Could be. Now it's not as long as you'd anticipate for the third. It's okay. What's my range here? 320. Oh shit. No, that's 3 times the range. Let's look at it in log. That's kind of the benchmark, right? If we're 3 is a minimum. Just not 100, right? So we longer is longer, right? So we don't have to worry about it not being longer. You're kind of back to there's the 3 of the 3. I hesitate there. Also, right, this is kind of a straight line, so you'd have to do some sort of A, B, C in there. If it keeps going, right, you can just hear this might ultimately get better, right? You might get this, right? So you got to be prepared to go again. So why would I do that? God damn it, come here. Because, right, if this is my 1 and this is my 2, there's a 1, 6, 1, 8 right there, right? Which is where they typically go, right? Again, why trade Abby when you can trade Normie, right? Oh, where do they usually go? 1, 6, 1, 8. Where's that? 1, 6, 1, 8. 1, 2, 3. So is this my 4? Well, I wouldn't shy away from that. Look at this here, right? So prior resistance becomes support, breaker block, right? Well, what else? Right? You want the full suite. What else can I use here to help me make a better decision? Well, what do they normally do for a wave 4? Where do they typically go? What's the norm? Right here. Oh, look at that. You see how that all kind of starts to come together. Now, the one other thing I have in here, I don't have a golden, but I do have a corner. I've got a corner pocket. If, right, that's going to hold. Well, shit, doesn't matter, right, for in terms of the corner, right? Well, whoa, that 50, that 80% already burned. I'm to and through. The 80% was hit right here, gapped through it. So you don't, once you burn the 80, it's burned, right? You don't get another 80%. So this is not much value anymore since it's already been hit. I mean, you can use it for structuring, but I would still, at this point in time, I'd be using the channels, right? Which is so foundational to get Elliott Wave, right? 1, 2. Okay, I'm going to go 3. So it looks like I'm in my 3, right? That's why you'd use the channeling, right? That's how Elliott taught it. That's the idea, right? Oh, we're breaking the channel. Oh, looks like I've got a 3. 3. Is that 3 done? I'd buy that. But I wouldn't. Well, okay. So look at all there's just an air pocket right here because you've got all this gap down here. So I wouldn't give it too much room, but I'd buy that. I'd put a stop on it. At this price point, I'd probably be doing options. Earnings coming. I'd wait. Let's get through earnings, right? See what the reaction is there. That may be why he's asking, right? But anytime you're buying the week before earnings, it's, you better have some conviction in the numbers. It's ballsy, right? Ballsy to buy it, right? So I wouldn't buy the underlying. I'd buy options, which are probably going to be more expensive because you're coming into earnings. So it's not a great time for that trade, but that's the TA on it. How am I doing? 10 minutes till Brian joins. Okay. CN Salazar, I think we already did Solana. Didn't we do Solana? Didn't we? Oh, shit. Share this one instead. Is that the right one? Solana. Yeah, I was looking at this morning. You've got this hard break here. Oh, this is I was just back and forth with Sensei PK, and we were looking at all the alternatives here because this section it's got a bit of a clusterfuck, right? So again, kind of back to where I started. What can we see in here? What do we know is happening here? What can we be objective about? All right, it's consolidation. What comes out of the consolidation? What comes out of the consolidation, right? The expansion. 1, 2, 3. I don't think anybody's going to dispute that. Where's the 4 end? That's the variable, right? Could be here. Oh, it's a beast of an Elliott count. It's tricky, right? This is not for your everyday average. Oh, I just read the Elliott Wave principle. This is a tricky one. A, B, C. This is, I didn't spot this at first, but he did. 1, 2, 3. There's your 4, 5, right? So big extension in the 1. It actually works. It's weird, but you can get away with that W there. Triangle into the X, A, B, C into the Y, right? So I got a W, X, Y. This only works, right? And this is 30 years of doing this, right? My habits are pretty set. I had to be reminded because if you look here and consider this, because I looked at that and thought, oh, diag. But in the new Elliott Wave, which is funny, right? We have new Elliott Wave. So Elliott's been dead for how many years? But we have new Elliott Wave rules that 3 does not have to be the long. Pardon me. Let me rephrase that. 3 can be the shortest in a diag, as long as 2 and 4 are correct, and 5 is longer than 3, right? So this, if you count it this way, 1, 2, 3, 3 is the shortest. Conveniently, Elliott Wave International has decided that is no longer a limitation. Say it that way, right? Which there's times where that's going to be convenient. It's interesting, right? That we're just deciding that. Now 1, 2, 3, 4, 5. So you'd end up in the same, whether you did it. Oh, the other count was to go WX and then finish it over here as an ABC. Then you'd have some sort of a truncation, but you end up at the same place. So if you were doing it this way, this is what I thought at first, WXY into a truncation, which I was like, God, fuck, is that all I've got here? I hate it. But then with the new rules, if you thought WXY, this would still be 1, 2, right? So you end up in the same place, actually. New rules, 1, 2, 3, 4, 5, A, B, C into the 2. Up we go for the 3, right? So this is here because I was measuring, okay, if this is the 2 and this is the 3, right? So now is this 3? Do we have to go A, B, C, all right? If we're going to be done here, 1, 2, 3, and then you got it right. Measure twice, cut once. Where do the 3s usually go? Where's the highest probability location for a wave 3? Right there. But oh, we go past it. Okay. Can we use that? Well, let's see what I got there. Looks to me like we could be done here. No, oh, okay. All right. Oh, it didn't quite get there. Okay, so let's label it. Looks like 1, 2, 3, 4, 5. Okay, now it's not quite a 1062, right? So you didn't get a sweep here, right? You didn't get it, right? We came right up into the imbalance, right? And that was not, right? Couldn't get through it. So you don't have it yet. gosh, ideally, right, it would sweep up here, right? That would be even better. That you'd get this, right? You'd get you. This is doubles, right? It's not good enough. It's not the break and come back. So I'd be reluctant to be overly aggressive here. Give this a little. Oh, you look at shit. That's a 1 hour. It looks like you got a 5 there. 1, 2, 3, 4, 5. Looks like you got 1, 2 is started right now. 3. And what happens on the 4? Let's go. God, that's actually a pretty good little 5 in there. It looks like 1, 2, 3, 4, 5 of the 5. A, B, C. It's too deep for a golden. How are we doing? Everybody's good there. Yep. That's going to be 707-ish, right? So hit 786. Excuse me, damn it. How are we doing? Okay, Brian's going to be joining us in a minute or two. Here, I got to remember, I got a little day. Oh, what did we do? So there's somebody's been commenting on the markets. Okay, 4, 1, 2, 3, 4. This is the problem right here. This would have me waiting, right? We didn't clear that, which I'd like it a whole lot better if we had, right? But since we didn't, it's hurry up and wait. If it goes right, so there's FOMO, right? If it goes, oh fuck, I should, I would, right? You got to have rules. You see, otherwise you just like, oh fuck it, all right, let's wing it. See, if you don't have conditions that have to be met before you take the trade, you are just fucking gambling. There's no method to it. There's no structure to it. There's no discipline to it. You might as well just go to Vegas. Come on, red. You're gambling. Otherwise, you wait, right? That's the hardest thing for traders, right? Patience, right? Very elusive skill amongst traders. The best traders will tell you that was the skill that took the longest to develop. Okay, so that's Solana. I think CN. I think you just hurry up and wait. Let's see how it reacts to the Fed. All right, I got 5 minutes. Okay, so Adobe, you're showing ETH. Dr. Alban, thanks, man. Thanks for it. Don't forget my Bitcoin chart that was posted earlier. Okay, I got a Bitcoin chart from Dr. Alban. Is that right? Hang on. Oh, where is it? Hang on. I'm going to get it. Who's that from? That was Dr. Alban. Alban, where's your chart? Oh, there it is. Okay, hang on. Good thing you reminded me. Copy link, Dr. Alban. Okay, so let me, oh shit, how am I going to do this? I think if I do it here, you guys will see it. It's going to give me a new link. Will you get it? Yeah, I think you will. Okay, so this is Dr. Alban. Okay, I got to copy that. He's become an active member. Dr. Alban giving us a look at his count on, oh, Dr. Alban, I know you do this. You connect them. Okay, so let me, give me 1 sec here because I know we're going to have Brian joining us in 5 minutes. Okay, so this is, oh, okay. So we're going to go, you're doing perpetual on Binance. Okay. All right, 1, 2, I wouldn't differ with that. Okay, 1, 2. 1, 2, okay. Oh God, man, I gotta, this, I can't see when that's like that. Okay, so I gotta do this. Bear with me, guys. I can't see when they're all like that. I understand why you do it because it helps me see what your thinking is. Okay, so he's looking for a 4 now. So the channeling, very good. 1, 2. Now he's channeling. It's a little deceptive, right? But it's 1, 2, 3, right? So he's in this channel here. I would just here. Oh, I would do it this way, right? So okay, so we're in this channel. 1. Let's take that up a degree or 2. Put it in a color we can all see. Okay, 1, 2. We're seeking the third up here, the fifth of the third, 4, 5, right? So this very, very bullish count, right? Okay, let's what else is he doing in here? I got to do that. So we get rid of that. Oh, we got another one. Okay, so now I can get in there. Okay, this is a little big on the degree. Let's come down. So 1ABC, right? That's perfectly legit. So just to emphasize the point, right? Here's the fake, right? This is liquidity up, liquidity down, right? What do they do here? Right? This is, if it's important that you identify it, right? So you can, next time you know what happened there. That's all. This is liquidity, and then off we go. Okay, so I got another one here. All right, let's get rid of that one. Holy shit, there's a lot of them. Okay. Okay, there we go. I think I got all of them. Okay, so 3. Let's get you in green. 1, 2, 3, 4, 5. Okay, now so he's got us finishing. Ooh, that's a tricky one there. Okay, so I'm not so sure we wouldn't end up in the same place. I would probably count that a little differently. Well, we can say it this way, right? So I'm not saying it's not, but this is the count that he's proposing. Okay. Well, of course, the first, I'm going to choose my language here. It's not that your thinking is off track. It's just that it's, you know, again, if you're applying Elliott rules and guidelines, we couldn't go impulse. And then I'm assuming you're not trying to get an impulse in there. So it doesn't quite work, but you're on the right track here, because see, this part of it doesn't work, or it would be invalid, because we can't go 5, 3, whatever that is. But you're thinking, I think you're on the right track here. Oh, let's see. How would I get you here? Oh shit! Geez, I got to get to my count here to it's a little wacky. So 1, 2. Okay, so if you want to do 1, 2, I see this would have to go off, right? So this becomes the problem here. Okay, so let me see if I can fix this for you, or at least give you let me rephrase that. Let me give you another way to think of it. Okay. So you've got this impulse here, but there's nothing in here, right? So what are we doing with this? Seems like that would be important to this count. So let me, oh fuck here. Okay, so 1, 2. Okay, what about this part? So I think you were going 1, 2, 3. It wouldn't work, right? You're on the right track. You gotta finish it. Okay, so 1, 2 seems more probable. 4. Right. So sometimes, right, when you're labeling, it's like, what's the most obvious? What's the most obvious thing? Now you get into trouble up here. It's like, oh fuck, what? But just when you're starting, right? It's, when in doubt, what's the simplest thing I could see, right? Of course we get complicated up here, but okay, if this is a 2, 1, 2, 3, why would I not think that? Well, okay, because the reason you wouldn't is because you got confused here. Oh, there comes the, hey, there he is. Hey, Brian, let's go. I think if we do both of us on, let's just do no video.
Sure.
Okay,
yeah, whatever you prefer.
That'll free up screen space, because I'm just finishing up this is actually your timing. We're just finishing up the last chart here on Bitcoin.
Love it.
So your timing's perfect here. So kill your camera, and then we'll come back up, because this will be good timing. Okay, perfect, right? Just it frees up screen space. Awesome. Okay, so bear with me and we'll finish here. So let me. I'm trying to help this member through the thinking here. So this doesn't look like anything. It's just a sloppy, choppy. Looks to me more corrective, right? So one thought would be something along these lines, right? So maybe you've got something corrective here. I'm not saying that I know the answer here, but this is maybe another way to think of it, because this, right, all of this is just a fucking shit show, right? What do you do with that, right? It's not an impulse, right? We can be clear about that. We absolutely can be sure about the fact that we don't have an impulse here. Is it a motive wave? That's the real question. I think the way we did it here is I think we did it this way here. We did it as a WXY with a triangle in here. God damn it. These fucking allergies are going to kill me. So I think that's something you might consider that I know this gets a little, it's a bit waggy up here. That you've got some sort of a triangle in here, A, B, C, C, D, E into the B, and then we go A, B, C to give us a B. So the premise being that you've gone A, B, C, right? And so this is our sideways correction. And all of this just becomes consolidation. Oh shit, I can't do it in that shape, but you get the premise being, okay, I've run out of steam here. My nice impulse, whoa, all of a sudden momentum shift. Now I'm consolidating. Now that's not necessarily bad news, right? So I'm always amazed, right? And Brian here, as I wrap up, will concur, I think, with me that we have this, right? So Bitcoin drops 10,000, and you'd fucking think it dropped 30,000 points based on the media. Oh my God, crypto's crashing, massive crash in Bitcoin. Oh my God, where's it going? What's next? It's just a fucking unbelievable to me. And all I go is, oh yeah, keep pumping that out, because what does that do? That scares the shit out of retail, who's like, oh, well, I heard that Bitcoin ETF was good. And then they panic. I would not surprise me if there wasn't a concerted effort here to go, okay, because if you've got an ETF, right, you need liquidity. So if you want to buy more Bitcoin, don't you want to create a little fear factor? Oh God, where are all the stops, right? Because what are the stops? The stops are sells. They need someone to buy from. So by creating the panic, that it's just unbelievable to me. That Bitcoin goes $10,000 and we have a crash. That's a fucking fart in the wind for Bitcoin. Oh, $10,000. Oh God, I want it to come down 20,000 so I can buy it at a better price. I mean, really, if this is 1, 2, and we did 3 here, whether it's 3 or 1. Fucking retrace all day. Please retrace. Lower is better. Come down here. Oh, fuck. Yes. What? No, I don't. The algo doesn't care about your Elliott count, right? Just be mindful of that. Oh, can I buy it down here? Can I buy it where it normally retraces to? Now, where are you pulling from, right? If we've got our Elliott hat on, you're pulling from a completed impulse here. It's a little bit lower. The algo doesn't pay attention to your Elliott count. It's just going to go dominant to dominant, right? Which is right there. Shit. Koki, you got to have to wait. Don't mind. Share this tab instead. Shit, I was on the wrong one. Sorry, guys. Thought I was on the right one. If they're, oh, fucking A. I got it, guys. I got it. I was on the wrong one. I got it, guys. I got it. God. If they're calling me during a live stream, something is wrong, because I would normally rip their heads off for that. Okay, so now we've got the right thing here, right? So the idea being, we want the retracement, right? It's the pause that refreshes. Think of it that way if you need to, right? You need the retracement. A healthy bull market. We need this. So God, when you read crypto's crashing, you should be going, oh God, does that mean I get an opportunity to buy it lower? Or do I have to buy the high? What does retail do? Why is it crashing? Because retail thought, oh shit, we've broken 69. I guess it's time to buy it. And I'm going to use that as a great segue to bring in Brian from Santiment, because that's what's happening here. Retail is getting spooked, which creates sells, which means BIFs, banks, institutions, and funds have an opportunity to be buying your. That's why if you're selling Bitcoin, who do you think's buying it? Right? Got to be someone on the other side of it. Think of it that way. All right, let me use that as a segue to bring in Brian. Now, how do I get you in here? So I got to bring, hey, you know what I need from you, Brian? I need you to share your chart, because then I can get your chart up.
Yeah, you got it. I'll share my screen.
Okay. It's frozen. God, these guys are quick to call me if it's frozen. Okay, so there we go. So I'm going to hand this off because this is something different. Now, we brought Brian in a couple weeks ago. He's really here for reinforcements for me because there's so much complexity. There's so much content. They have such a full-featured product. I'm still very novice with it. So I have to bring him in to show us how to use it because I'm still learning, but there's so much value in it. From what I just looking at it, I just go, God, I've got to learn how to use this. So he's here to just help us look at the kind of information you can glean from checking on sentiment and see like, okay, how is this going to help me make better trading decisions? It's not necessarily, oh, there's going to be glaring sell signals up here, but there might be insinuation here. There might be something we could deduce that maybe the market is a little tired here and that the crowd sentiment is waning a bit. Well, it would be the same thing down here, right? Is there going to be an opportunity here based on the on-chain metrics or the crowd dynamics or just the general crypto buzz, right? Well, fuck, well, what do we call it? Just crypto. I guess we don't call it crypto Twitter, crypto X, right? What's going on X? What's the sentiment? Being mindful of the fact that the crowd is always wrong. So if I can almost guarantee you, very bullish up here, right? Where are we now? Oh, crypto's crashing. Okay, with that, I'll turn it over to you, Brian.
Absolutely. Yeah. It's been obviously a massive downswing in the markets over the past week. You've talked mostly about Bitcoin, which is our focus as well. Everything is kind of living and dying as it has throughout the history of crypto on how Bitcoin is able to perform. And obviously with its what appears to be about a 13.4% downswing in the past week, it's dragged a lot of altcoins down, a whole lot more than that 13% that Bitcoin's showing. So really what we're looking at now is how the sentiment is shifting. How are people reacting to this drop? Do they think that it was, that the top that we saw last week, do they think that's kind of the permanent top for 2024? Or do they think it's only going to be the permanent top for a couple of weeks? And this is just a tiny blip in the radar that they can buy into the dip on and hopefully cash in on with this opportunity presenting itself. So many don't quite see it this way, but it's a bit of a self-fulfilling prophecy. There isn't an inevitable path for Bitcoin's price to go up and down, especially in a given week. It's very much based on the fear and greed that is fluctuating on a daily basis, depending on, whether meme coins are jumping up or whether AI tokens are jumping up, or if it's too Bitcoin dominant. Everyone is constantly pushing and pulling and overreacting to the fluctuations that are happening in the market. And right now, if we take a look at the watch list here, we see several different categories. Coinbase assets down 13.5%, ERC20 is down 15%. Meme coins, take a look at this, 47.5% drop in total market cap over the past week. This watch list factors in for the top 100 meme coins. So that tells you a little bit about where we were a bit overinflated 1 week ago compared to right now. I should also mention, we have all sorts of special watch lists like strong and oversold. These are the ones that typically are showing. I'll even open it for you. It's the assets that are typically showing signs of high on-chain activity compared to usual, and maybe better than average opportunities for dip buying if you are on the side of dip buying right now. Ethereum, Cardano, Dogecoin, Chainlink, Matic, Bitcoin Cash, Uniswap, Arbitrum, Immutable X, OKB, just to name a few that appear to have better than average on-chain metrics despite, what obviously is a universal drop across the crypto markets right now. So with that, before we transition, let me know what I can kind of expand on there and clarify.
Well, when you say something is oversold, how are you guys defining that within Santiment?
Yeah, typically we look at a metric. I'll show you right here. It's known as MVRV. And what MVRV indicates is whether or not the average wallet for any given asset over a given period of time. Usually we look at something like the 30-day average trading returns because it's a nice average midterm time frame that a lot of people are able to trade on without being hooked on the screens on a daily basis. So right here, we're looking at Bitcoin's MVRV, for example. It shows that there's just slightly a tick below 0%, indicating that Bitcoin is officially oversold on the 30-day time frame because traders are down 1.5% when factoring in for any wallet that has been active in the past 30 days. On the longer term time scale, looking at the 365-day here, the average wallets are still up 42%. So it really depends on whether you're focusing on more of a swing trading strategy from week to week or month to month, or if you're just hodling and kind of letting things sit where they may despite all of this volatility. The long-term trend still shows that we're a bit high, and there could be some arguable more pain that could be coming up to get our average returns a little bit closer to historically what its resting state is at 0%. Sometimes that happens just from markets flattening out for a few months and chilling out, or it can happen from a further drop. There's different ways that it can happen. But the big one we're focused on right now is the 30-day, which just in the last 24 hours, really, we finally saw it dip back below 0% for the first time in about 6-ish weeks or so. And obviously this time when it was below 0%, if you look at where prices were, 42K or so, prices just absolutely erupted just from this tiny, tiny drop. You can see when it was at its lowest point here, the 30-day MVRV was down to about negative 9.5%, meaning the average wallet was at a 9.5% deficit compared to where they bought the Bitcoin that was sitting in the wallet. So obviously this was the huge bottom on January 23rd. We had just dropped back below 40K. Panic was ensuing. People were kind of calling that big bull cycle that had ran from mid-October to mid-January over right here. There was a lot of capitulation, fear, calls to sell, and obviously people who were panicking are kicking themselves now because prices absolutely erupted from that day. So when we say oversold, it's really referring to percentage returns being well into the negative for the average wallet out there. And this is one of our top indicators that we refer to on a daily basis.
Beautiful. I mean, how powerful, right? Particularly with the time horizon.
Yeah, there's so much you can really gather from metrics like these. And another thing we're watching right now is how the big key stakeholders are behaving at this moment. We specifically like to check out the 10 to 10,000 BTC wallets to get a grasp of how much the big players are accumulating or dumping at any given time. And in short, it's good news if you are staying bullish and have your diamond hands in full effect right now, because they really have not dumped much at all. This bright green is measuring the percentage of the total supply that they've held, which you can see since early February when we talked about that local bottom. They were holding 66.2% of the supply. Now it's at 66.75%. That 0.55% increase may not sound like much, but it's billions of dollars when you're talking about the total cap of Bitcoin. When you talk about the actual amount of Bitcoin, it's even easier to understand. You can simply see, if you look at the top left of my screen, on February 4th, they were holding 12.98 million BTC collectively. Now it's up to 13.12. So those 6 weeks or 7 weeks that have gone by, we've seen an accumulation from 10 to 10K BTC wallets of about 135,000 Bitcoin during that time. So that's good news. The so-so news is the fact that stable coins from these same shark and whale tiers are dropping, meaning the buying power, the dry powder, as many like to refer to it as, it's been going down for quite a bit. I could even zoom out. We'll look at the last year. And you can see these red and blue lines representing Tether and USD coin wallets that hold between $100,000 to $10 million. They've been going down all the way since June of 2023. And yes, prices have absolutely erupted as it was going down. But the good news is this green line has been moving up consistently. So this green line indicating how much Bitcoin they were buying with these stable coins that were going down was at least rising significantly, indicating that a price rise could be justified. But if we start to see this green line, either of these green lines, but especially this dark green one showing the total amount they're holding, if that starts to drop along with their dry powder, that's a sign that money is moving out of crypto altogether and back into fiat, whatever they're doing with it, equities, buying new houses and yachts, who knows? So we need to keep an eye on this green line to ensure it's staying up, which it looks fine right now, despite the drop. And perhaps there could be a drop at some point, but the stablecoin holdings will go way up, indicating they're kind of just waiting on the sidelines and they're targeting a price in the 50Ks or something, who knows? But I think a lot of people call for target prices well in advance. In 3 months, I can buy at this price. That's really not how crypto works. And it's not the most savvy strategy, because these key stakeholders are reacting to the market fluctuations on a daily basis, changing their minds all the time, just like the rest of us humans watching the markets. And they can drastically alter the trajectory that it looked like Bitcoin was going on just a month ago or a few weeks ago, with any small piece of news about BlackRock or Michael Saylor or MicroStrategy accumulating or secretly dumping coin. You never know. So that's why we really like to check out these objective metrics to give us a great glimpse of what's actually happening on chain.
Nice.
And we can, of course, also talk about the social side of things, right? We are known as Santiment, which is a play on words on sentiment. And we are the global leader when it comes to social metrics and the actual pulse of what the crowd sentiment is at any given time, using math and objectivity, which is, I think, the only way anyone who studies crowd sentiment should do things. Because people look anecdotally all the time and say, hey, crypto trader 123 with his 200,000 followers, he said he's bearish now. I guess that must mean everyone's bearish. And I've seen so many people get misled by simply seeing posts from the people with a lot of pull in the markets. But what we do is we measure the overall amount of mentions of keywords, positive versus neutral versus negative comments about an asset, using our algorithm that we have that measures this, scraping millions upon millions of comments on Twitter, Telegram, Reddit, 4chan, and even now Bitcoin Talk, which we just added, to get a fair gauge. Right now, it looks like the trending words are kind of all over the place. I do see Ethereum, which is being talked about much more often due to Ethereum 2.0 and the improved scalability, and more specifically, recently, the SEC delays the lower expectations of Ethereum's ETF approval by May, despite their staking addition. So I think there's an overall bearish sentiment, more so than usual, toward Ethereum. That's why it's up here. We can, of course, see the FOMC being talked about at number 2. A lot of people are anticipating the decision by Jerome Powell coming up about whether interest rates are going to rise again. It seems like the consensus is that they will stay the same, but we really won't know until it happens. We've been surprised so many times, especially for those who remember 2022, when we kept thinking the interest rate hikes were done, and boom, they would just add another 0.75%, and it rocked the markets all throughout that year. So especially when markets correct like this, people immediately try to find an attribution for that. And I think the FOMC, depending on how it goes, it's going to be kind of the red herring for further drops.
They gave plenty of volatility.
Yeah, exactly.
If you look at it, it's all over the place.
100%.
The first reaction was straight up.
Right, exactly. And the other thing is, we can look specifically at trending tokens. We talk about the bearish versus bullish sentiment overall in the markets. We can also look at specific assets here and see which ones are leaning bearish or bullish according to the crowd's perception of them. Shroom has been one of the big rising discussed assets due to the fact that it's having an airdrop. Ethereum, we just mentioned. Solana has been a huge topic of conversation, probably the most polarizing notable asset out there at this time, being measured specifically against the Ethereum network. So it's very interesting to see that they're the second and third most trending tokens out there right now. And then I'm still seeing plenty of meme coins, airdrop coins. USD coin down here is very interesting. Usually stable coins don't pop up on this unless there is concern that it is liquid and a valid place to keep your dry powder, right? Otherwise, Tether and USD coin tend to be ignored. And you can see Tethers down here as well. Bitcoin, obviously, it's a consistent mainstay, but not always at the top because this is a measurement of percentage discussion related to their normal resting state. So that's why Bitcoin isn't number one. Otherwise, it always would be. Yeah, besides that, I also wanted to point out just the overall amount of people talking about buying versus selling at this time. And it's always a very good measurement of how the crowd is perceiving these markets. When we tend to get a lot of polarization, that's when there's the most shift. Right here, we saw a ton of mentions of selling after there was just a very subtle correction after this top, and boom, markets take off right after. Here was kind of a mix of both. There was a slight jump from that huge dip about 2 weeks ago, and we had this huge surge of strong opinions. It's time to buy. It's time to sell. I'm buying. I'm selling. I'm bullish. I'm bearish. And the result was prices basically just kept coasting upwards. Until we eventually saw that all-time high on March 13th or 14th, depending on the time zone you're in while you watch this. But consistently, we can see that the sentiment is much higher on the buy side than sell side. That's historically always going to be the case. People don't talk about crypto consistently just to crap all over it. They're usually doing it because they like it, they're interested in investing in it, and they want you to be interested in investing in it also. So seeing that buying is consistently above selling isn't anything abnormal. When we see huge separations, like we kind of saw here right before that correction that led to this, that's when things get a little dicey and we see prices tend to correct, because markets typically always go the opposite direction of the crowd's expectation. A lot of times, most of the time, it's a big mix of bulls and bears, more bulls and bears. But if you see huge consensus that crypto's going to the moon, Bitcoin's going to hit 100K in 2024, or Bitcoin's going to hit 10K by 2024. When you see those opinions, that helps spur the markets to go in the opposite direction, because those small players are panic selling or panic buying all the time. And the whales, like we talked about here, they're taking full advantage of what the small millions of addresses out there are doing at any given time.
They wouldn't do that.
No, never. It's not about money for them, right?
It's a social contract.
Right. I also wanted to point out this model. We put a post out about this on our Santiment feed Twitter yesterday.
Oh, I've not seen this.
This is the first time really in about 5 months. Of course, it's doing a refresh, but I'll come back to it. The point is, when we had been looking at this model, it was overwhelmingly just showing all assets being in the danger zone, showing orange and red bars. Gradually, as markets have corrected over the past week, we're finally starting to see a lot of suggestions from this model that it's time to buy once again, when accounting for the 30 or 90 or 180 day trading intervals, because this is kind of an accurate measurement of weekly and monthly market movements. And I find that fascinating because we had been on such an overheated run, kind of similar to what we saw throughout 2021 with the original all-time high hitting, that it was bound to correct at some point. It was just difficult to see how fast it would be for this model to start showing that it was buy time once again. And not for all assets, but for a lot of them out there now, we're seeing that the model is saying that according to the math, according to all of those people who were buying at the top or buying at the bottom 3, 4, 5 months ago, the average collection of all of their wins and losses indicate that there are finally a bunch of altcoins that are showing slight to extreme oversold signals now. And that's huge because this model doesn't care about feelings. It doesn't care about the sentiment from the crowd. It's simply telling you, according to the math, according to the MVRVs, like we talked about, it's finally time for a lot of pain because we talk about Bitcoin being at negative 1.5%. There's a lot out there that are at negative 10 or 15 or even negative 20% over the past 30 days when factoring in for the average wallets out there, because of the fact that, the Shiba Inu buyers from a few weeks ago, or Bonk or Floki, some of these popular meme coins, say what you will, you can all have your own strong opinions about them, but it was very obvious that there were so many buys coming in after they had already 2x or 3x in value that we were bound to see some pain come right after. And that's essentially what we're seeing in a lot of these metrics right now, much more for altcoins than for Bitcoin.
For anyone who's trading meme coins, I don't know how you could possibly trade without this, because there's no reason for a meme coin other than sentiment. They don't serve a function. There's no use case. It's just a trading vehicle, and that's entirely based on sentiment and pumping and who thinks there's money to be made. They're a pure trading vehicle. So this would be invaluable. I personally don't trade them, but for someone who does, and I know many have made huge amounts of money doing it, I don't know how anyone could logically approach it without getting access to this kind of information on a meme coin. It's invaluable to me.
Yeah, I mean, especially if you're into more of those speculative assets, social volume and things that aren't so on-chain related or development activity related, which we didn't even touch on yet, they are crucial for understanding, how Doge or Shiba or Floki is likely going to fluctuate next, because they're almost entirely controlled by the crowd. If there's a huge trading group that starts telling thousands or tens of thousands of people that it's time to buy Floki, that will be enough capital to pump up Floki because it's a relatively small cap asset compared to Bitcoin.
That's what makes them moon, right? There's no liquidity, right? So there's nobody to sell it to. So hop up.
Exactly. But eventually the people who originally proposed that it was time to buy, they sell after getting their 2x or 3x on their money.
Or 20x.
While the unknowing people that weren't even in that trading group are like, oh man, Floki just seems to be printing money. I'm going to buy it despite it already being up 300%.
That sounds like FOMO.
It's essentially the definition of FOMO. It's just people fearing the ride upwards, fearing missing out on the ride upwards, and basically ignoring the pragmatic head on their shoulder that's telling them, maybe you should wait a little bit, Yeah.
So, pragmatic. That would require discipline and patience.
That's true. And some traders have it, some don't. That's why you can really, instead of kind of going off of vibes and feelings, you can use math and data and metrics on Santiment to help you decide when social volume is ballooning, like it was on March 11th. Like, yes, the true top actually happened on the 12th or 13th or something like that. But when we saw this big social volume spike right here, that was a pretty clear indication that we were beginning to hit peak FOMO. Just like, there was a temporary stop here on February 27th and a drop right after the January 10th spike when everyone was euphoric about the ETFs being announced by the SEC. You can see social dominance went through the roof, and weighted sentiment, which actually factors in the positive versus negative commentary, it ballooned on those two dates that the SEC was officially announcing that the ETFs had arrived. And that's what happened here too. This was the most positive spike on March 10th, right before the top. since the ETFs were announced 2 months prior. So that's a pretty good indication. People are getting way too euphoric and greedy right here. And then finally, after it drops, they start to get fearful again. We see a little bit of a rise. And now we're kind of getting back toward a healthy, normal ratio between people talking positively about it versus negatively about it.
Beautiful.
But I know we talked about just like a half hour or so. I don't want to take up too much of your stream's time. I know you're putting on a great show, and shout out to all of your wonderful fans out there. I'm appreciative I got to stop by and say hi and show you kind of where we're standing.
You're so nice to do that. This is so, I mean, it's such useful data for a crypto trader. I don't know how you could be exposed to this and then not think, oh God, how could I not take advantage of this? I think, Brian, we have got some sort of a discount code you set up for. So if they use our link, which I know we did, yeah, if it's in our link tree that's underneath this video, or it will be when we post this. So to save them a little money, they can trial it. They can come in there and go, okay, well, now I will tell you this. You're going to have to invest a little time, right, in learning how to use it. So, I mean, the pricing, as you see there, is really quite reasonable for the data that you're getting.
This is what everybody starts at. It's completely free. Anytime you make an account, you can have a free 1 week to check out all the metrics without any lag on the data or limitations on the historical metrics. So you can literally go back to the early 2010s and see what Bitcoin was doing then, and you can see what it's doing as of the last 5 minutes from whenever you're looking at it. So it's completely risk-free. The discount code we set up for you guys is TradeDevils, all caps.
Yep.
Check it out, and it takes 25% off your first month or even first year, depending on which one you would like to buy, if you decide that this 1 week where you explored it was worth your time.
Beautiful. Hey, thanks for coming by, Brian. I really appreciate it. You're nice to jump in for us.
Always, my friend.
I hope we can have you back a little bit later, as well as people get used to it. I would welcome your input anytime.
Absolutely. I'm sure I'll be back soon. We'll talk, and best of luck on the rest of the stream.
Okay. Well, okay, man. I'll let you sign off. Okay, guys. Thanks to Brian. I'm gonna kill him, and I'm just gonna wrap up here because I think. Oh shit. Let's see. I have to go back here, right? So here, this is where we left it, right? So this is. Yeah, fuck here. Give me a sec, guys. Here, let's see if I can get my. I think I've lost my count here. Yeah, I may have. Here, let me give me 1 second. Share this tab here. Let's just see if I can get something here that just an alternate to consider, right? So we'll leave it here. I think this is a little one of my senseis here. Wonka is on here. It looks like it's either Wonka or PK, right? So these are a couple of the Elliott Wizards on my team. It looks well. Here, let me get that off there. I know it's one of them because I never leave that thing on. 1, 2, 3, triangle, 4, 5. That looks, well, that could be Wonka or PK, right? So the more detailed the work, I can usually identify who it is. This is the bit that's a little challenging here. Now, in this case, this is the when in doubt, what's the simplest alternative? This is the simple solution, which is more in line with what Dr. Alban was suggesting. So if you're just looking at here on the daily, it's easy to look at this and go, oh, okay, well, 3, 4, 5. Okay, well, actually, that might be useful here. So, what if this is the 3? Well, it's implying that the whole move is the 3, right? So from this low here, from the squeeze, right? No, from the squeeze, from the contraction, the squeeze is in black, comes the expansion. Okay, well, if we're looking out here on daily, okay, well, you could probably wrestle that into your head, thinking, oh, well, okay, it doesn't look like a great finish. The challenge with this, I thought I had a better look at this. Is if we come down a little bit, it's hard to get that 5 to fly. So you're looking here, oh, some sort of weird 4. Oh, do I have a 5 there? It's iffy. All right. So now, in the context of simpler is better, I mean, you can't quite get one there. I mean, it's just not. It's how would you get a motive, right? You're trying to get 5. It's just not there, right? 1, 2, maybe you talk yourself into this, some sort of a ugly diag along those lines. It's just fugly. So because of that, I kind of look at this and go, is there an alternate here? This is triangle. So something like this, right? Which suggests to me this not quite, it doesn't look like a motive, right? So I'm looking at going, okay, some sort of correction here. The two connected. So I look at this and go, okay, all of this is some sort of consolidation. What comes after? So which is not bad news. What comes after the contraction, the consolidation, right? We just looked at these, right? So from here, right, the consolidation comes the expansion, right? The long, right? You could do it this way. Consolidation, expansion, consolidation, expansion, consolidation. Are we expanding again? Well, if there's a 4, and now when we get some resolution here, either higher or lower, if we've got this range here, once we come out of that, we can probably circle back here and get a better estimate as to what was really happening here, because it's a total wag now, just a wild ass guess as to what that last little section is. This, if you if you put the 3 up here, that's the most aggressive. That's the most aggressive to say, oh, fuck it, it's close enough, right? There's a 5. Most aggressive. Most conservative would be, okay, 4's going in now. I mean, there is no Elliottician who can label that with conviction, because you can't have, there's nothing there to pin your count on. It's just a total wag. So this is hurry up and let's get some clarity out of here. As far as I'm concerned, as I started, please tell the world, tell retail that it's crashing. Please tell them it's crashing. Right? Maybe we can buy down here at 50. I think 52 was where I was saying, God, if I can buy it at 52, I back the truck up. That's 50, right? 52, a little higher, right? If you can buy right this consolidation here, if I can buy in right around here, 52-ish, I'm interested. Okay, I should probably wrap there. That's probably good. So kind of a good mix here. I hopefully you like bringing in a third party. I know he's promoting a product, but it's a pretty fucking seriously good product. People approach me at least 3 times a week. Three different people will approach me each week wanting to promote something or partner with something or do something. And I'm very selective about it. So when Brian approached me, I was really initially like, okay, what do you got? Right. The more I looked at what they were doing, the more value I saw. So thus that little partnership. So we are an affiliate, right? So if you use our link, yes, we do get compensated. That's fucking $10. But I would encourage you to take a look at that. It's pretty good. If you're trading crypto, I don't know how that wouldn't be useful. The only way that would be a poor investment is if you don't invest the time to learn how to use it. Which is, you got to find that time somewhere, right? So do you have that time? Because you're not going to just go in there and go, oh, this is drop dead simple. You're going to have to spend some time with it. So make that decision. But if you do have the time, I don't see how that could do anything but help you. Okay, guys, we're going to wrap it there. I'm going to end the stream. We'll be back. Let's see. What's today? Oh, I'm back on Friday. Okay, guys, talk to you later. Have a good afternoon.